Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, August 5th. We got just one economic news release scheduled for today, and that is the ISM services, or also known as the ISM non-manufacturing, for the month of July. So back in June, we had a 52.2% rating, and anything above 50 is considered a expansion. Anything below, of course, is contraction. So we had a little bit of expansion in the month of June. Forecast was supposed to increase that a little bit further in July, and it jumped up to 56. So great news right there in the services industry. Now we'll jump over to the headline news, and this week, as I mentioned, it's going to be kind of a little light when it comes to the fundamentals, which is those economic news releases. So this week will be a little light, so it'll be more on the technicals, which will be our headline news. Now the stock market's a little mixed. The only one that was up was Nasdaq so far this morning, or even for the day. Everything else was down. Now, one thing that could throw a little wrench into things was Fed member Fisher. He had a speaking engagement today. Now he's been a kind of a opponent of the quantitative easing. He has been a big fan of it, and part of his speaking engagement today was talking about how a lot of members were looking at when they might be tapering the QE quantitative easing. So that could roil up the market a little bit. Today it was some of the stocks that were kind of generating some of his cash, cashing in profits and such. But this had a little bit of a factor as well with Fisher speaking. So a lot of people know he's not really a big fan of quantitative easing. So some probably took it as a grain of salt, but others probably are a little more, create a little more anxiety a little bit with investors. So let's go ahead and take a look over at the bond market, see what's going on for the day. Now we're approaching the close so far, and right now we're kind of in a trading range which can probably be in the middle here. We are down from where we left off on Friday. The Friday we left off, as you can see, prior close 100.94 on the Fannie Mae 3.5 coupon, and so far at 100.75. So it's enough to warrant a pricing for the worst. Anything above, anything more than 12 basis points will create a worse pricing or better pricing in either direction. All right, so interest rates look like the pricing is slightly worse today. We are hovering around the 10-day moving average. It is possible this week we could kind of see more of a sideways pattern here, as we don't really have a lot here that's gonna that could be, at least on the fundamental side, that could move things. So we'll be more reliant on technical side this week. All right, folks. You guys have a great day. Thanks for watching, and we'll see you guys tomorrow.